Big welcome to everyone. Good afternoon, good morning, depending on where you're joining from. Delighted to be here today. My name is George Radford. I'm the managing director for RPA, the UK and Africa. We've got clients joining from all over the world, actually, predominantly in Africa. I can see there's people from South Africa, Nigeria, Zimbabwe, Angola, Mozambique, Kenya, Uganda. A few people in Southeast Asia, and a few people in Europe. So a very warm welcome. We will be taking questions at the end. Please, you can submit the questions on the panel there. There's been a whole host of questions we've received prior to today, and I'll try and address those as we go through the presentation. By way of background, I'm a chartered surveyor. I've been working property for almost 20 years, and I'm a specialist of working with clients in the Africa region in particular, and helping them to invest into direct residential property around the world, but currently with a particular focus on the UK, namely because that's where we see the best opportunity currently. So what we're going to do today, we're going to have a quick look at the business, the RPA group, for those who may not be so familiar with the company, add a bit of background to what we do. We're then going to have a look at London and talk about the London property market in particular, the UK property market, what's been happening recently. It's been a really exciting time the last couple of years in the UK. And then we're going to look at a few opportunities that we've currently got available for clients in the UK, just add a bit more colour. So just talking about the RPA group business model, just to sort of go over the sort of key fundamentals of what we do. So ultimately what we're here to do is to work with clients globally, doesn't matter where clients are located, and to help them safely, effectively and efficiently invest into direct residential property with a strategy that is designed to optimize the return on investment. So how do we do that? Firstly, it's about understanding, the investor mindset, undertaking all the stringent research and due diligence to ensure that any property that we present to clients has the RPA stamp of approval on it, and we know that all the checks and measures have been put in place, i.e., good financing in place from the developer, very strong track record, the property's located in the right jurisdiction, and so on and so forth. Also, by way of further background on the business, we've collectively got, the key founders, Richard Bradstock, Charles Ledbetter, and myself, all have, 20 years plus experience of working in real estate, and we really leverage that on a day-to-day basis. And we obviously ensure that any counterparties that we work with, not just on the developer side, but on the mortgage origination side, broker side, solicitors, and on the lettings and management side, are all accountable and adhere to the highest levels of customer service that we strive to provide. So just delving in a bit deeper on our services, because this is really important to ensure that everyone understands this. So right at the front end, as I mentioned, we're very focused on the research and the due diligence. So ensuring that any property development that we present to you, our clients, has been through the relevant checks and measures to ensure it is going to be a great product at the end of the day, delivered by a great developer in the right location with a very strong underlying economy, with a very strong rental market, and in 5-10 years time, when clients are wishing to exit, having benefited from very strong levels of capital growth, that there's a very liquid market, there's a good secondary market. So we undertake all of that at the front end. And then, sourcing the right residential property investments obviously goes hand in hand with the research and the due diligence. And we're best in market really of getting our clients access to the best opportunities. Then on the investment advisory side, that would very much be having a one-to-one meeting consultation with clients, just to greater understand, I suppose, your investment requirements, and then based on your budget, your investment horizons, timeframes, and so on and so forth, making the best recommendations for you in terms of a product that's going to most suitably meet your investment needs. The conveyancing process. So once we've identified that property for you, and we secured the unit by way of reservation, we will then appoint the lawyers on your behalf, who we've vetted and checked to make sure they're a safe pair of hands, and they're going to provide you with a very solid service. So we will facilitate the legal process, and then on the mortgage side, as I mentioned earlier, we will also facilitate that either directly with the lender or more commonly with a mortgage broker. And then right at the back end, so a residential apartment is completed, a year off plan, let's say, and it's now completed. We will handle the handover, the snagging, the marketing of that unit, the tenanting, the collection of the rent, the day-to-day management, and then 5-10 years later, when you wish to exit, we're here to help you to resell that property. So in terms of where we're located, I'm based in the UK. I've probably failed to mention that, albeit I've got a huge amount of experience of being in Africa and working with African-based clients. So I'm in the UK. We've got a team in South Africa, which is headed up by Charles Norris. We've got an office in Dubai as well, in the UAE, and then also in Hong Kong. And then we're further supported by our joint venture with One Global Property Services, who have a huge presence in Southeast Asia. So it broadens our global footprint, but also further enhances our product offering to clients. So hopefully that adds some background on what we do and how we do it. In terms of property, I mean, there are some fairly key and reoccurring themes with, in particular, clients based in Africa when they're investing in the UK property market. Often it's very much driven by that desire to continue to generate wealth, long-term wealth generation, which we know property, international property more specifically, does achieve. Getting clients exposure to hard currency, rental income, and hard currency assets, diversifying away from currencies like the Rand and the Naira, who are, as we know, extremely volatile. So, getting some exposure to some safe haven markets, and, helping to get some diversification within your investment portfolio instead of being fully, exposed to your local market. Also, the cost of financing in the UK is still very, very competitive in terms of the rates, very low. And we can assist clients by getting mortgages conservatively 60, maybe up to 70%, depending on the client profile, with an interest rate, I'd say around 4% typically. Could be a bit more, could be a bit less, depending on the specific client. So that's a real driver for our clients looking to invest into the UK, benefiting from very low cost of financing, and reducing the amount of equity they've got to put into these investments, but also borrowing some cheap money from the bank and increasing the overall return on investment, obviously. A few other points on there: currency exposure I've mentioned, succession and retirement planning, and children's education planning. This is always a recurring theme for my clients. They're looking, for the next generation. Where are their kids going to study? Where are they going to university? And looking at property, I suppose, as a wealth generation tool to generate money, which can then be used to help to fund for one's child's education further down the line. Excuse me. So why the UK? I've touched upon some of this already, but we've got a very robust economy here. It's top 5 economy in the world. It's arguably got the best outlook of all of the G7 nations. A very low interest rate environment, which I've also mentioned. Sterling is still pretty weak compared to a lot of other currencies, especially if you're holding USD. Sterling, in my view, still represents very good value. We've got a very safe and sound legal system, so it gives you the security on the investment. Massive undersupply. We're not producing enough properties in this country to cater for domestic consumption. So there's a massive supply and demand imbalance, which is favourable for property growth and rental growth over the medium to long term. A world-class education system, which I'll come on to in the next slide. in terms of commerce, the ease of access. London, for example, has 4 international airports within 1 hour of the city. Crossrail infrastructure, so I'll touch upon Crossrail in a second, and HS2, 2 incredibly significant engineering works that are taking place across London, almost done, and then also from London up to Birmingham, which is HS2. I'll elaborate on that later in the presentation. London, I think a lot of people also overlook the fact that not only is it a safe haven market, not only is it, along with the likes of New York, one of 2 alpha cities in the world, but it's also one of the world's leading technology hubs. And I think we often overlook that fact. It's obviously key when it comes to science and medicine, and in terms of offering a safe haven market for clients to put their money. One could argue there's probably not many better markets in the world, property markets, that can continually and consistently deliver in the same way that the UK and London does. So let's just look at a few key stats with regards to London. In terms of the house price outlook growth, 23.5% over the next 4 years, which is very strong. 19.3% on the rental growth over the next 5 years, again, very encouraging. The economy is growing, so gross value add in terms of the economy, it's continuing to grow. As I mentioned earlier, we've got a big shortfall across the whole of the UK, but London itself has a shortfall currently of over 50,000 units, which is not going to be corrected in the short term, largely because the level of construction is still very much hindered by COVID, supply chains, and so on and so forth. And we're really struggling to keep up on the supply side. So London as a city, in the short term and the medium term, is certainly going to still have that massive supply and demand imbalance, which is going to be favourable for property growth over the medium to long term. In terms of population, 9.5 million now, believe it or not, and we're looking at a population growth of over 2 million over the next sort of 10, 15 years. So the city of London is booming. EY, Ernst & Young have highlighted London as the #1 city in Europe for real estate investment prospects. Schroders highlighted London as the #1 city globally for business for 2022. So there's so many accolades that we can talk about linked to London that really support the investment case. That being said, the last 5 years have been quite quiet for the London property market. It actually went backwards for a while in the run up to Brexit, and it's been quite flat for the last few years. But we really see now that changing, and the outlook is incredibly strong, which is very exciting. I touched upon earlier London being, one of the key education hubs around the world. Can you believe 500,000 students within the city itself, Greater London, and some of the best universities in the world? These are the top 10 universities in London. I mean, they all are globally recognised, but Imperial College London, UCL, King's College, LSE, Brunel, and so on and so forth. So why is that important? One, it attracts, the highest profile of student. Two, those students then go on to fuel the economy. And it's a massive business in its own right, the education system. So education is so key for an economy, and then obviously a strong economy is well placed to support a strong property market. Just a few companies that call London their global headquarters, and obviously London is one of the key financial centres around the world, and obviously one of the key insurance centres around the world. So all of that's very well and good, but what's happening on the property growth side? So Greater London, we're looking at sort of 6% growth this year, which is very strong, and then an average over the next 5 years about 4.7, let's say 5% per year. If we compare that with prime central London, it's looking like it's going to have a good year this year, 7.5% growth, but then the average over the 5 year is actually a little bit less than Greater London. So our focus predominantly is on Greater London, zone 3, 4, 5, commuter, I suppose, belt, suburbs where people can get a bit more value for their money and still get easy access into the city. I mentioned Crossrail earlier on, and For those of you not familiar with it, it's 100 kilometers of railway line. It's the biggest infrastructure project ever undertaken in the United Kingdom. I suppose, notwithstanding maybe the Victorian undertaking of the railway lines, but in recent years, probably since the Channel Tunnel, and it's revolutionising the transport system within London from east to west. A train every 2 minutes carries up to 2,000 people per train, so it's really going to change the experience of getting squashed on a tube in London. We're focusing on some key areas that benefit from this and will benefit from this and continue to benefit from this, because obviously if a property is located close to a Crossrail station, that makes it better connected and more desirable for tenants and owner-occupiers alike. Sorry, I know I'm going quite fast, but usually try and keep these webinars to about half an hour. We will be sharing the slides following this presentation. So please, take a bit more time and have a look over them. And of course, myself or one of our advisors will be openly available for one-to-one meetings, get a better understanding of your requirements and give you sort of more specific advice, I suppose, based on your personal financial circumstances. So that's the RPA group, that's the UK, that's London. And let's now have a look at a few projects, and then I'll address any questions that we've received. So Bookbinder Point in Acton, one of the key locations that's going to benefit from a Crossrail station. Fantastic new development here, just launched. Prices starting at £460,000. We're looking at a completion date of Q1 2024, and the deposit payments are initial 10% deposit, and the balance is payable on completion in 2024. So to give you an idea, on a one-bed apartment, £460,000, you're going to pay £46,000 deposit now. You don't do anything for another 2 years plus, and then only then will you complete on the property and pay the balance. So let's say it's another 30%, and then you could take a mortgage maybe of 60%, maybe up to 70%, depending on your personal circumstances. The yield profile here is very strong as well, around 5% gross yield, very strong for London. So a very compelling opportunity, very well designed. All units have outdoor space, communal roof garden at the top, and just perfectly placed really to benefit from the uptick in the London property market over the next 4 to 5 years. Again, some salient information there. I think I've covered most of this, but a mixture of 1 and 2 bed units, 98 units in total. And yeah, entry level prices on the 1 bed around the 460 mark, 2 beds from around 600 mark. So at the bottom there, that's probably quite a useful slide for your reference. Payment terms, how does it work? Once we've had a one-to-one consultation with you, understand better your requirements, made some recommendations, maybe we thereafter found the right unit for your investment requirements, we secure the unit, take it off the market, you pay a £2,000 reservation fee to secure that unit. That's deducted from the purchase price, obviously. And then you pay a 10% deposit on the exchange of the contracts, maybe 4 weeks from now. That's when you legally have the right to purchase the property, and the developer is legally obliged to deliver the property. So 10% deposit would be payable within the next 4 weeks. Then you don't do anything for another couple of years, and only then would you be in a position to make further payments on the property. So in terms of the connectivity, we've got Chiswick Park, a couple of minutes by tube, which is fantastic. Green space, Kew Gardens just down the road, and the nearest railway station, probably closer actually, 6 minutes in terms of Acton Town Station. I walked there the other day myself, 5 minutes, but hugely well connected to get both into central London, but also to get out, because you're very well located in the west side of London. Westfield Shopping Centre, this is one of the biggest shopping centres in London, and a massive draw card, very, very close to the property. And obviously Kew Gardens, which is one of the most beautiful public gardens in the country. So all of this on your doorstep. Okay, that's London. I've deliberately kind of kept it quite brief. We have a whole host of London opportunities, prime central London, other outer parts of London within the Greater London area, all at different price points and all that will, I suppose, be slightly more suitable for different clients. However, I am mindful, having done this for many years, that everyone's got different budgets. And, you know, to give you an idea for London, you're going to be looking at minimum equity requirement as an investor of around £200,000, maybe £250,000, which is not viable for everyone. So therefore, I just want to spend a few minutes looking at an alternative opportunity in Birmingham, the fastest growing property market in the UK in terms of major cities. The economy is absolutely booming. I was there a couple of weeks ago looking at some of our new sites, and this presents a fantastic alternative for clients that want to get exposure to the UK property market, but maybe don't have the budget to access a London property. This, you know, in my view, hands down would be the next best alternative, because then at least you're getting exposure and you're starting the process, because you would only require around £100,000 of equity spread out over the next year or two to access an investment in Birmingham, so half the price of London. So 5-year property forecast, 24% growth, very strong. This year we're looking at 3.5% rental growth. That's very, very compelling. Also, very strong population growth, massive shortfall of homes in Birmingham over the next 10 years, 60,000. And it's one of the youngest cities in Europe. So all of this is, you know, very compelling. Outside of London, it's the largest concentration of international companies. We've got Goldman's who've recently put their flag in the ground there and setting up office in Birmingham. So it's got many accolades to support the investment case, not just the companies, not just the Crossrail, which I'll come on to. It's got the Commonwealth Games this year. It's got over 100,000 students, 4 universities. The economy is absolutely booming, largest exhibition centre in the country. So let's talk about infrastructure and connectivity and transport quickly. So I mentioned Crossrail in London earlier. HS2 is connecting Birmingham to London. So it's the next stage, I suppose. I think the only kind of key fact to take away from here is the journey time currently from London to Birmingham is 82 minutes. Once HS2 is completed, that's going to be reduced down to 45 minutes. So it's effectively halving the journey time. That's amazing for commerce, being able to get from London to your staff in Birmingham, or to get from Birmingham to a meeting in London. You know, it's sort of revolutionizing the city in a way. And this is also helping to fuel the expansion of Birmingham Airport, looking to almost double in size over the next 10 years, 10 to 15 years. You know, that's in no small part driven by Crossrail. The easier it is to get to a city and to an airport, obviously the more people are going to use that airport. And Birmingham is booming from a population growth perspective, and obviously that's also going to encourage the airport to be busier and busier and busier. Crossrail is headquartered in Birmingham, so the project being headquartered in Birmingham, creating 36,000 new jobs, 4,000 new homes, and just massively further enhancing the regeneration of central Birmingham, which is coming together, you know, fantastically well now. Off the back of my trip last week, just seeing you know, Paradise Circus all being developed and central Birmingham, it really is becoming a truly great city. So let's just have a quick look at the opportunity that we currently have. It's called Scholars Quarter. This is the development site here, just to place it on a map. In my view, hands down, the best new development site coming out of the ground in Birmingham. This area here is the Jewellery Quarter. We are located within the Jewellery Quarter. This is the city centre, Birmingham city centre. You know, the 4 universities are in short distance from the development. This is Paradise Circus here, £600-700 million regeneration project on the doorstep. For those of you who aren't familiar with the Jewellery Quarter, it's the heritage area within Birmingham. Beautiful abundance, hundreds of listed buildings, and they're all being refurbished, converted to residential. There's an abundance of nice cafes, bars, restaurants, and it's the nicest place to live within central Birmingham. And of course, the benefit of being able to walk to work, walk to university from here is a massive draw card for tenants and for buyers alike. So in terms of how this translates into numbers, you can see a few images here. So this is the top of the site, and this is the bottom of the development, and the finish of the apartments is second to none. When I was in Birmingham Monday before last, went to our previous project on the adjoining site, the Copperworks, and the finish there was immaculate. That was essentially phase 1, and Scholars Quarter, the project I'm presenting now, is phase 2. So 2 years off plan. I just can't wait to see this when it's finally completed, because it's so carefully designed. There's 100 units in total. It's spread over a number of different courtyards. All the units are going to benefit from a lot of bright light space, communal facilities within, in terms of the outdoor space, the courtyards, yeah, it's just very exciting to be involved. The developer here is King's Crescent Homes, fantastic developer. We're delighted to be working with them again on our 4th project now. And any clients that invest in here will be, absolutely delighted in 5-10 years from now, because not only is the city of Birmingham booming, but this development itself is, so well placed to benefit from that. In terms of the price point, to give you an idea, you're looking around £200,000 for a 1-bed unit, almost 2 years off plan. So how does that translate into numbers? So you'll be looking at around a 20% deposit to secure a unit. So let's say it's a £200,000 1-bed unit. Today you'd be putting down, or in the next 4 weeks, a £40,000 deposit. You then don't do anything for another couple of years, and when that property completes, you'll probably be looking at putting down another 60,000, and then the mortgage would cover the balance. Those figures I quoted there, the 40 over the next 4 weeks and the 60 on completion in 2 years, give me a total equity amount of £100,000. Includes all of the purchasing costs involved in the transaction as well. Very strong rental profile with 5% yield plus, and just an incredibly exciting opportunity. So for any clients on the call who maybe wanted to invest in the UK, looked at London, and maybe it's not quite viable at this stage, this would be, hands down the best opportunity that I could recommend currently. So that concludes my presentation. I've kept it within 30 minutes, which is quite a rarity for me. I hope I haven't gone too quickly, and I hope I've given you a good insight to our business. In summary, we're specialists and experts in helping clients like yourselves and clients around the world, and myself in particular being a specialist of working with clients in the Africa region, understanding the investment drivers, but also some of the challenges of investing from Africa into the UK, and helping clients navigate that process. So we really are specialists in providing that turnkey property investment solution for our clients. There's a few questions that have come in, and one is with regards to inflation, which is a big problem for the world now, but also for the UK, we're in excess of 6% now inflation, which is crazy. So that's inevitably going to drive up interest rates, and we've already seen that. So the question I've got here is, what's your view on inflation and the increase in interest rates and the impact on the UK property market? I mean, look, naturally, interest rates do need to go up slightly. They've been historically low for about a decade, but I don't see them increasing significantly in the short term. Global governments have a very difficult balancing act, including the UK and the Bank of England, where they need to manage inflation carefully. And the most obvious way of doing that is by increasing interest rates, encouraging saving instead of spending. But we're in a very difficult situation currently where we're still not out of the back of COVID, and we need people spending. So governments can't just bang up interest rates, by several percent, because that's going to kill the economic growth, and we still need to maintain that. So in my view, interest rates will creep up, cost of finance will become a bit more expensive, but ultimately right now people are chasing fixed assets. It's an uncertain world we're living in. They're either investing in gold, they'll start to invest in more government bonds as the returns become a little bit more compelling. Certainly won't be saving because the interest rates are laughable in the United Kingdom, and a lot of people will be chasing property, as a fixed, stable asset, which you can largely hedge against inflation by increasing your rent on an annual basis. And we know it will give a safe, stable return over the medium to long term. Also, the inflation is very good for property prices in a lot of ways. It's driving up capital values. And as the cost of materials continue to increase, that needs to be passed on to consumers, which will obviously result in an increase in property prices. So it's not all negative. It makes day-to-day a bit harder, obviously, for going to the supermarket. But I'm certainly not overly worried about inflation. There's another question here in terms of, do you need to come to the UK to purchase one of these properties? No, is the short answer. We're set up so we can manage these transactions remotely. So you can do it from the comfort of your living room, as long as you've got a scanner. So yeah, you can. It's all set up so solicitors can do remote certification. It can all be done on digitally signed documents. The only thing you would need to do is courier the originals across to the UK once the scanned copies or the digital copies have been sent across to the solicitors. But you can do it all without leaving your home country. Management, got a question on, how do you manage the property? So we have a preferred partnership on the lettings and management side, which manage all our clients' properties to ensure that it's a turnkey solution and it's specifically set up more on the basis of sort of portfolio management, specialise in working with international landlords and making sure that every property that you have is managed meticulously, and the tenants pay their rent on time, and relevant insurances are put in place, tenants are screened properly, and that they would collect the rent, pay any cost on your behalf, and then pay the net amount into your nominated bank account. One more question, and then I think in the interest of time we'll probably wrap it up. Question from a client based in Nigeria. Do you have access to mortgages for Nigerian-based clients? Yes, absolutely, we do. I've got hundreds of clients in Nigeria who I've helped to successfully invest into the UK. We can get rates around 4% if you've got UK exposure, worked in the UK, got a UK bank account, dual nationality. We can get much better rates if you've got an existing UK property. But if you haven't got any UK exposure, I'd say around 4% interest rate, maybe 60% loan to value, so 60% mortgage. We can also approach, so that would be UK lenders, but we can approach some Nigerian banks, Access Bank, for example, looking around 5%. They do have a minimum loan size though. GT Bank would be another one we could look at. So we do have options. And just on that, and in closing, the best way forward from here for everyone that's attended is one-to-one meeting, so we can really just sort of further clarify any points that maybe I've rushed over today and haven't been overly clear on, but also, and more importantly, to understand your requirements and then sort of give you tailored advice in line with your investment needs. So Charles is based in South Africa. So anyone in South Africa on the call, you've got Charles's contact details there. Please do get in touch, or maybe he'll get in contact with you. And then I overlook the Africa business. So if anyone wants to contact me, feel free to do so. Charles is in Johannesburg next week, I believe. So any clients who've attended who might be based in Gauteng, Joburg, Pretoria, then Charles will be available for meetings. I think he's there from Tuesday to Thursday next week. In closing, thank you very much for your time. It's been an absolute pleasure, and I look forward to seeing everyone again. Take care and all the very best. Thank you.